I'm Jim Jubak, and welcome to this week's Quick Pick video. This week's Quick Pick is Truist Financial Corp. This is a super regional created by the merger of BB&T and SunTrust, so Southeast Regional. This has not been a great time for banks, but one of the sort of rules that I've got for getting through the next 5 years, and especially if you're looking for retirement safety, is anytime you see a yield above 4, you should snap it up. Well, thanks to the fact that banks have been in the dumpster, we've got better than a 4% yield on Truist, and I'm suggesting that you buy it on that basis. So this is the Invesco KBW Bank ETF. We're looking at really down, and then a slight rally recently, and then a return to down. This is somewhat unusual because banks should be seeing a move, bank stocks should be seeing a move up on Federal Reserve plans to raise interest rates, because that plan itself increases the net interest spread at banks, and so usually we get an increase in bank stocks. But instead what we're getting is this downturn in banks because people are starting to anticipate, well, a recession, or at least a slowing of the economy. But even more importantly, banks are getting hammered by rising costs. It's a job market that's encouraging job switching, so banks are paying out bigger compensation, and that's cutting into their net earnings. Okay, let's now look at a chart for Truist. Same general pattern, down. Now the down part is what gives us the 4.01% dividend yield, plus a fairly decent buyback yield. This is a bank buying back shares, so the total yield on this comes to 5.75%. A pretty high measure for going forward. So one of the reasons I like this bank stock as opposed to other bank stocks is that on the cost issue, they're still taking costs of the merger out of their profit and loss statement. So they've got about half of those costs coming out in 2022, with the rest coming out in 2023, which is driving down costs. The other thing is that this is a regional bank, and it's big, but not that big. It doesn't have to follow the most stringent of the Fed's capital requirements, and that gives them a chance to get a little more leverage. They aren't a pure bank. They've got a big insurance brokerage business, one of the top 5 globally. They've got an original investment banking practice, and they seem to be doing some fairly innovative stuff on the digital end with Lightstream, a digital consumer lending platform, and a point of sale consumer financing effort with the 2021 acquisition of Service Finance. So this gives them a chance for other ways to tap into consumers. So I think going forward, this is a bank I like on its business prospect, but really what I like right now is that dividend. I'm going to put this one in the dividend portfolio on jubakpicks and Jubak AM. If you like this video, please give it a thumbs up. Subscribe to my YouTube channel, that way you see more videos. We're doing about 3 a week. If you want to see the dividend portfolio and other stuff of mine, you can go to my free site, that's jubakpicks.com. Or if you want 6 portfolios instead of just 3, you can go to my paid site, jubakam.com. Thanks very much for watching.